Hey everybody, we're going to go ahead and get started here in just a couple of minutes. Thanks for joining us tonight on our Growth Fund webinar. We're really excited to get started here and get your questions answered this evening on anything you might be wondering about for our Spartan Storage Growth Fund. We're going to be talking about the projects that we have in the fund and why we really love this investment opportunity this year. Okay, I see that many of you have just joined, so we're going to go ahead and get started. Hello, my name is Ryan Gibson with Spartan Investment Group, and tonight I'm going to be walking us through the Spartan Storage Growth Fund. This is probably one of the most popular funds that we've ever had at Spartan, and that's because the investments that we have in the fund are in great markets. We love their locations, they're fully entitled projects, and now couldn't be a better time to invest due to the funds having these projects purchased and in the fund and construction underway, and we kind of know where this opportunity is going now and exactly what we're going to be investing in. So we're going to go ahead and get the disclaimers out of the way. We're not offering any tax, legal, or investment advice. So please do your own due diligence, consult your tax and legal team, and this is just a general overview. For the complete offering, please visit our deal room. For those that don't know Spartan, this is our leadership team. At the helm is Scott Lewis, our CEO, and I am Ryan Gibson, our Chief Investment Officer. We both co-founded the company in 2014. And we're accompanied by our leadership team, Aaron Saunders of our Spartan Construction Management Company, Matthias Kelmer, who heads up our self-storage division, Free Up Storage, Whitney Ham, and Kevin Holst, who is our CLO. So just a little bit more about Spartan. We have about 30,000 units or so in our portfolio, over 120 full-time employees, and we've raised over 250 million to date with about 600 million of assets under management, primarily self-storage. And we've been recognized by the Vet 100 and Inc. 500 magazine for over the last 3 to 4 years. And we've got quite a track record of realized investments. These are properties that we purchased, we've operated, we've executed the business plans like we're going to talk about tonight, and sold for great returns. These are project level returns for the 14 fully realized investments that we've had. For a complete track record, you can visit our deal room. We have that made available to our investors. But what we do is we actually bring our property management in-house. And we launched a Free Up Storage national brand in 2020 that manages all of our projects. So when you're dealing with a Spartan investment, you're dealing with a vertically integrated company, meaning that we do all aspects of the operation to include property management, construction, etc. So this is Spartan's brand. We focus heavily on automating the properties, having a team on the ground that we control and manage, and we bring everything in-house. And so this is our Free Up Storage national brand, and we have a great team across 12 states currently that manages all of our facilities. Now for the growth fund, what's more relevant is our construction company. So Spartan Construction Management is helmed by Aaron Saunders, our president of SCM, and they have over 100 years of real estate and construction experience. This is a picture of the team here and some of our projects across the country where they've done over 500,000 square feet of self-storage development across 14 development projects. So very experienced team and dedicated to making sure that the Spartan Storage Growth Fund projects are all successful. Now these are some of the markets that we invest in. You can see the little white pins on the screen. We primarily focus on the Southeast and Texas. We also have a smattering of projects throughout Colorado, Wisconsin, and in the Pacific Northwest, specifically in Washington and Oregon. And what picks these markets is rent growth, positive net migration of population, income growth, rent growth, economies of scale, and storage demand. And that's where we pick our markets to invest in. Now, why we love self-storage is because of its strong resilience to recession, right? Obviously, as we look at entering a recession potentially, or we're in one, or whatever you might think we are in the economy, the uncertainty is when self-storage really starts to thrive. And you can see that many institutional investors have gotten into the space because they know how recession resistant it could be. So the storage industry has really grown over time, and it's got a 92% average national occupancy Actually, 1 in every 10 Americans uses a self-storage, and self-storage is not just for personal use. It's also a great uh, tool for businesses to use to store their belongings. And there's very few human interaction. Sometimes our facilities are fully automated, meaning that we don't actually have a manager there on site 24 hours a day or even during the business day. And they can be low, they're very low maintenance to operate, which is why we got into the space in the first place. We wanted something that was easy to own, evict, and maintain. We also love the fact that over the last 40 years, it was the best performing asset class. And you can see that even in times when real GDP growth goes down significantly, like the pandemic, or prior to that, the Great Recession of 2008, self-storage benefits from disruptions in the economy, and the occupancy has remained relatively consistent despite where we are with real GDP growth. So that's a really strong indicator that self-storage is a uncorrelated asset when it comes to diversifying away from the stock market. So self-storage performance, people might think, oh, well, self-storage is something that people have because they have too much stuff, which might be true, but usually it thrives when there's a lot of life events. Relocation, downsize, moving, death in the family, a growing family when you have a home renovation or a move. And self-storage just continues to perform because the world keeps moving and people keep changing. Jobs, locations, families also are always evolving, and self-storage is what drives, or life events are what really drives and benefits our occupancy. So enough of that. We're going to go ahead and get into the growth fund and what 3 investments that we've already purchased, we already own, and are already operating or building at the moment. So first of all, we're going to talk about our facility in Bellevue, Florida that we're constructing. And that one is pretty much right outside of Ocala, right by the villages, in an area that is just absolutely booming. I mean, Florida is the #1 growing state, and this Bellevue market is experiencing population growth that's over 3 times the national average. And so we're going to talk about this 75,000 square foot development that we're building in that yellow box there that we've actually already broken ground on and started clearing the site. The next investment that we have is in Pea Ridge, Arkansas. You're probably wondering, where the heck is Pea Ridge? Well, Pea Ridge is just about 10 minutes from Walmart's new campus in Bentonville, Arkansas, which is one of the fastest growing markets, 10 times the national population growth. And we've actually, we already own the facility. You can see the existing buildings there. And we're simply just turning this low producing income RV parking area into additional storage due to the growing demand for self-storage in that market because there's so many people moving there. That construction has actually already started. And lastly, in the growth fund, there's an investment in Kingsland, Georgia, which is about 30 minutes north of Jacksonville, which has also got really strong demographics and growth. What we love about this deal is we actually bought this property in August, and it's already leased up to over 25% occupancy. And in that green box there, we're going to be adding on 20,000 square feet. And in the red box to the right, that's actually unplanned expansion. So if we build that additional land or build on additional land, that'll be additional upside that's not demonstrated in our projections. So what does all this mean? These 3 investments are an opportunity for you to invest in all these 3 properties or all 3 properties for a minimum investment of $50,000. So one investment gives you the benefit and the diversification of all 3 projects. Now, what we like too is just these projects are just in excellent locations in the United States, specifically the southeastern United States, where the population growth is really strong. And then, like I was talking about in Pea Ridge, Arkansas, right by Bentonville, Northwest Arkansas just continues to boom and grow, primarily driven by the fact that there's 3 Fortune 500 companies there: Tyson's Food, J.B. Hunt, and the Walmart headquarters. Now, when you add up all these 3 projects and you calculate all the returns, it rolls up to a 24.8% projected return, meaning you're just making shy of 25% per year for the 5-year projection over the life of the hold after the property's been sold and realized. This is about a 2.38x equity multiplier and a 17.2% IRR. Now, here's why I love development deals. Development deals, taking a project from trees to keys, or a property from raw land to grand opening of a building, is that there's many different exit options that an investor has along the way, or that an operator has, that will help an investor reduce risk. And so the first option that we have is we simply can buy land and we can entitle it, meaning that we can get all the approvals in place to build the investment. And we can sell that investment and earn a return. And this usually takes 1 to 2 years. Now, what's great about the 3 deals we have now is everything is already purchased and fully entitled. So this part of the risk, or this part of the upside, has already been locked in. Our deal in Bellevue was purchased off market as an example. We already have all the entitlements and approvals in place, and we're already started construction. So that's a really fantastic risk mitigation. Our investment in Pea Ridge, again, it's already been entitled. Construction's already underway. We already own the asset. So this is really kind of behind us, but it gives you a great exit option. We could sell that property right now and produce value to the investors. So you have built-in value. The next part of a development stage is when you get the building to opening, right? The grand opening, get the keys. And then and the investors we can sell something at certificate of occupancy for a profit. For example, a lot of developers are merchant builders, and they just build a property and they sell it to a REIT or to a bigger operator. Well, what's awesome about our investments is 2 out of the 3 have already been given their certificate of occupancy. Our Pea Ridge investments already open because it's just an expansion, and we already have customers paying at the property. Our Kingsland property, just north of Jacksonville, that property is already open as well. It's already got a certificate of occupancy, and it's already leasing up 25%. So some of these investments, 2 or 3 of them, have already realized their certificate of occupancy, which is fantastic for risk mitigation. And then so really the business plan at this point is going to be to finish the construction on the expansion and the ground up, and get the investment to stabilization. Once we get the property to stabilization, that's what gets the investors their full realized returns after a 5-year hold. And that's essentially our business plan for each 3 of these properties. So let's kind of dive into some of the details. I know some of the people really want to dive into what this means and how we're going to transact each investment. So the first one I want to talk about is in Bellevue, Florida, and give you an update of where we are on that. This is a 4.5-acre site, and we purchased this property off market from a landscaping company that, he just really didn't want to develop the property, so he sold it. And we spent over a year seeking approvals to get this property zoned correctly and permitted correctly to build self-storage. And so all of that has already been done. We've been working on that for over a year. So you're going to benefit from our work that has already been put into this development site. You can see the trees there. This is an old picture. Those have already been scraped, and the property has been cleared and is getting ready for grade and foundations. This property really touts a 5-star location. So when we look at investments or self-storage really it's important to have it right next to a main road where there's a high traffic count, really great visibility and great access. And this is a 5-star location. We try to rank these facilities on a 1 to 5 stars. This would be 5 stars for 3 main reasons. First of all, there is easy access. So you can see on the picture to the right, you can see the boulevard that allows access from both directions of travel. And there's 28,500 vehicles per day that drive by the site. We like to see a minimum usually of 15 to 20,000. And this one just blows it out of the water with 28,500 vehicles per day. We also like that there's great visibility, and you can see to the left that there's 600 feet of frontage, meaning that you're going to have about 12 to 14 seconds to be looking at our property as you drive by. This is going to drive awareness of the facility, and it's going to drive more customers to our property, which is going to only benefit the investors. So here's where we are in the process at Bellevue. We have a full entitlement approval. And we have 2 types of buildings that we're building there. We're building a climatized storage, so indoor storage where it's air conditioned and heated. And so that's a very strong demand. 60% of the buildings are going to be climatized and climate controlled storage. And then the other 40% of the buildings are going to be drive-up storage. And the benefits to drive-up storage is that, for the customer that doesn't want to go inside of a building, they just want to pull their truck right up in front of a door, they're going to have that luxury of being able to do that. And we also have the in-demand climatized storage. So we think this diverse unit mix is really going to benefit the investors by having a really strong lease up at the property. Now let's talk about where it's located. It's located in an area that's growing, and that's where we invest. We invest in areas where there's more rooftops coming in, more population, job growth, population growth, et cetera. And you can see here the stars that indicate upcoming rooftops being built in the area, and also a brand new Dollar Tree distribution facility that's only 19 minutes away from the site. So this is only going to mean more jobs and more population going to the area. But the Bellevue site is in Marion County, Florida, and again, about 15 minutes from the Villages, which was the fastest growing metro from 2010 to 2020. And there's 3,200 homes coming into the Villages by mid 2024. And more than 50,000 residential units approved since March of 2017. And so this really kind of rolls up to an estimated 1.5% annualized population growth through 2050. So when you think about, oh my gosh, who is moving to this area, and how does this benefit? Well, when you have 6 times the national population growth over the next 5 years, that means that self-storage demand is going to increase as people move and grow to the area. So really favorable market. And when we looked at all of our competitors, we do a boots on the ground study and a market study on the computer of how much demand there is in a particular market. We found that the market occupancy is 95%, meaning all of our competitors are pretty much full. Now, when we lease up this property, this is our business plan. We're going to go build the facility. That's going to take us about a year. We plan to open about September of next year. So September of 2024 is when we have the facility completely built. And what we're going to do is we're actually going to lease up the facility at discounted rents. And the idea is we want our customers to get into the property because the business is very sticky in self-storage. When we get our customers in, they tend to stay for a long time. And so what we want to do here is we want to attract our customers with low rents, and then slowly over time, over the 4-year hold of this 4-year business plan of leasing up the property, slowly increase the rates, but not to a rate that's way over market or overpriced, but to a rate that's just slightly above to where rents are today. So you can see here that we have discounted rents during our leasing seasons or lease up, and we're actually planning to take 36 months to lease up this property, which is extremely conservative. We think we can do it a lot faster than that, but for the purposes of providing financial projections, we wanted to be conservative. And the current market rents are about $18 a square foot. And so we're actually going to only be planning a $12.72 rent per square foot in the first year, only going to $15 in the second year, and it's not until the 3rd year do we go slightly above where the market rents are today, and then our stabilized rents we're planning at $21.88. So again, we're factoring about 9 to 19 units per month of lease up, which we've seen way more than that in our properties that we lease up, and we've also carried about $1.1 million of reserves during this lease up period, just to make sure we have the cash to get through our business plan, which is very conservative. And what's great is we only really need 62% occupancy to break even, and that includes all the debt and all the expenses that we plan to have during the operations of the facility. So diving into the financial highlights, and again, this is all in your investor dashboards. If you really wanted to get into the details, we share all this information with you. But really, our business plan calls for about a $943,000 stabilized NOI. So when you want to think about conservatism, our total cost for this facility, when you include all the financing, all the land acquisition, permits, construction, et cetera, it's about a $10.1 million facility. And when you consider how much income it'll produce and what your yield on cost will be, it's a really fantastic 9.3% yield on cost, which at Spartan we like to see at least an 8.5% yield on cost whenever we build something. And this is effectively, for those cash flow investors, this is kind of like your cap rate going in. So Cap rate going in at a 9.3% cap is fantastic for a Class A asset in a market like Bellevue, Florida. So diving into the numbers as we wrap up talking about Bellevue, we're taking on about 62% leverage for the loan. So very low leveraged property. We bought the land already for $1.4 million. We closed on that a couple of months ago. And our construction budget's about $83 a square foot, which is right down the fairway as far as average cost for our team. And again, we already have that contract locked in and we're already building the project. This operational loss coverage just means how much money we're going to plan to lose while we lease up. So it's a conservative 36-month runway that we have. And overall, just really great conservative financials for the investment. Now let's talk about the second property in Pea Ridge. This facility is, it already exists, about 108,000 square feet or so. And there's a 27,000 square foot expansion that's already underway. It's fully permitted, fully financed, and already underway. So we have the existing storage facility is full, and our plan here is just to build additional 27,000 square feet and then lease up those additional units. Now, currently it's RV storage. You may be thinking, man, RV storage is in high demand. But when you look at that site, you can't get the efficiencies out of RV storage and get the rents per square foot that you can of traditional mini storage units. You know, for example, one of those RVs might take up like a 12 by 50 spot, and a 10 by 10 storage unit will fetch a much higher yield, and you can put 5 of them essentially in the same footprint, right? So much higher rents per square foot and much more demand in this particular market for it. Now this facility is beautiful. Has a great office, well lit, well secured. The facility was recently asphalted, and just it's overall in great shape. It's a beautiful property, probably one of the better assets in that market. Now, when you look at the front of the property, it's also got 2 vacant parcels. So you can see it right in front of those U-Haul trucks and the U-Haul trailers. Those are commercially zoned plots of land that we've assigned no value to, meaning that if we sold those or if we developed something on those property, it would only be additional returns above what we projected to the investors. So it does come with 2 bonus pieces of land. Now this is a real live shot, probably taken about 3 weeks ago. And you can see that we've already started to grade the site. We've removed all the RVs, started to grade the site, and we're getting ready for foundations. So we expect this expansion to be completed in the next 3 months. But what we love about this deal is that there's 10 times the national population growth rate. We have favorable debt. The debt on the property is fixed rate debt at about 4.8%. There's actually a blended interest rate loan on this property of 4.8%, and it's fixed, meaning that it doesn't change. There's no variable. The interest rate doesn't go up and down. It's a fixed rate debt loan. And what we also like about this property is that it's got a really strong track record of performance. This property has been well occupied and it's been full for a long time. And also, the expansion, as I mentioned earlier, is already underway. These are just kind of looking backwards at the last year or two on financials, and you can see it's performed exceptionally well year over year, which is fantastic. Great historical performance. This is the debt that I talked about, fixed rate debt. So we actually have one lender who's provided us with a purchase loan of $3.5 million, and then a construction loan of $2.5 million to finish the project up. Now, if you take those 2 rates, 3.74 and 6.17, it's a blended weighted average rate of about 4.8%. So you can see it's really excellent financing, especially in this market where we're seeing 8 or 9% debt on your residential home and even on commercial projects. The market in Pea Ridge is really well occupied, but my favorite part about this investment is that it's 10-minute drive from the new Walmart headquarters. So Walmart is investing in a world-class campus 10 minutes from Pea Ridge, and specifically about 10 minutes from our facility, which is really great news for the expansion. So this is just kind of a picture overview of the expansion that we've discussed before, and just kind of a little bit of a site plan of what we're going to do. You can see in that little dashed box there on the bottom right, you can see that there's 3 proposed buildings that we're adding on. Drive-up storage And and that's really what's in demand. And what's great is we can see what units currently are more popular than others. So we're building the most optimal unit mix in the expansion zone. So just a couple more pictures of the site, but here are really the details. Our leverage on the asset, so we're only borrowing up to 49.5%, so extremely low leverage on this property. 9.5 million was the purchase price. We've already owned the asset, and our construction cost is pretty low on this one, $71 per square foot, and that's because it was a relatively flat graded site with utilities already coming to the project. Very low permitting cost and overall very low entitlement costs. So really efficient on the construction costs and a very low 46% break even on the asset. Now, when I talked about yield on cost before, the Bellevue project had a 9.1% yield on cost. This one has an astounding 11.1% yield on cost, which is fantastic. And we pro forma'd an exit cap rate of about 6%. So moving over to Georgia, so this is Kingsland, Georgia, which is just over the Georgia border north of Florida. And this property is in the Jacksonville MSA, which has got some fantastic demographics that we'll get into. But I love this deal. This was actually purchased from a general contractor who normally builds houses. There's so many houses being built in Kingsland right now. He decided, hey, I'm going to try this storage thing out. Built this really nice property. I've quite frankly kind of overbuilt it a little bit, which is great for us because we picked it up at a great price and it's a really fantastic Class A building. And it really has favorable demographics surrounding it. That's why we love this market. We would do nothing but buy in markets like this, where there's tons of houses being built, people moving to the area, and it's surrounding a major MSA like Jacksonville, Florida. We also are planning on the 20,000 square foot expansion in the front. So the contractor delivered the existing project, and we're planning on expanding it. And then there's also, like I said earlier, that bonus land for future expansion. We don't think we're going to do anything with that land, but if we do, it'll serve as additional upside. So that's really great. Now, we bought this asset back in August. We opened about mid-August, right when we got the certificate of occupancy, and we leased the facility up to 25% in under 60 days. That's an incredible pace for self-storage, especially during the kind of the shoulder season as we go into the fall, where we're not really in the height of our leasing season, which is usually in the spring and summer. So really nice, fast lease up rate on this property. These are a couple of pictures of the site. You can see that it's kind of on a main road, and it has great visibility from both directions. So overall, a great location here with excellent visibility from the main road. And just like the Bellevue property, it has really great easy access. So you can access the site and get in and get out. And that's what people love when they're storing, because if they have trucks or trailers, things like that, they can get into the site very easily. One thing that we also found out late stage is that there was actually 10 RV spots that we didn't know we could put in here, and that's only going to serve as additional income that we haven't factored into the pro forma. So we really like this site. When I personally visited the property, I was just really impressed with the office, the location, the quality of the buildings, and just the area itself. You drive around and there's just so many houses and rooftops coming in. Probably one of the better markets I've seen. So we're planning on a 20,000 square foot expansion. We have the additional land. And when we did our market study, there was 288,000 square feet of storage demand in this market. And so when you think about us delivering about 50,000, it's really not even close to absorbing what's possible in the market. Market occupancy is very well occupied at 91%. And when you look at the demographics, again, we're considering this part of the Jacksonville, Florida MSA, which is about growing at about 3 times the national growth rate. And there's 3,800 residential units coming in around the facility. 2.76% annual income growth rate, which is fantastic and way above the national average. And again, there's about 288,000 square feet of unmet storage demand from our study. So if you look at the little red pin here on the screen, that's our site. And then all those little comment bubbles are residential projects coming in. 160, 126, 300 single family homes, 192 apartment units. So the growth around this facility is fantastic. And with that, it makes it favorable demographics for self-storage. So let's get into the numbers. We are leveraging this facility about 52%, so very favorable leverage. And we're buying the property. We already purchased the property for $4.5 million. And we factored in a little higher of a construction cost here, only because we hadn't gotten to a complete construction budget yet, but we're very conservative in this at $95 a square foot. We think we can build it for a lot less. Typically, we see between $70 and $80 a square foot, but we're just padding our construction numbers a bit just to make sure that we have enough construction and contingency to do the job successfully. 20,000 square feet is not a ton of lease up. So we're assuming that that additional lease up is going to take about a year. And we've carried about $320,000 of loss coverage for that. And our break even occupancy is an extremely low 58%. So adding all this up, it's about an 8.9% yield on cost. It's right down the middle of where we want to see our yield on cost for how much we're spending to build the property. And we're just overall really excited about this market and that it's in the growth fund. So kind of just summarizing all three investments. Investor has the opportunity to make one investment into the growth fund, benefiting from all three. And what I like about these deals, they have low leverage. We're talking about I think the highest leverage is 64%. And I really like to de-risk these assets and not have a huge loan on all of them, right? So 50%, I think, is about the average. We've had really strong lease up so far. We have a low break-even occupancy rate, meaning that we don't, that really takes away a lot of the risk to the investor. A lot of these projects are already entitled, or they're all entitled for what we want to do. Construction has already started, and really just excellent markets. When you look at where we're investing, they've got strong population growth and good demographics, and just overall great projected returns. I think this is one of the better funds that we've put together because our strengths are in our construction, development, and then obviously transitioning these to our operations team. So you may be wondering, okay, I'm new to Spartan, what do I do? Well, you may have already been sent an invitation to our investor deal room. And so whenever you go to our website, spartan-investors.com, you can see on the top right, there's an investor portal link. And if you haven't been sent an invite to our dashboard, you can create an account. So when you click on that, you can see the create account button, and that brings you to our account page. Once you get logged in, you'll see the Spartan Storage Growth Fund. That's what we've been talking about tonight. And when you click on that room, you'll see all the information. So I talked about financials and underwriting feasibility reports. You can see all the information under documents. And then ultimately, if you want to start making the investment, you click the Invest Now button, fill out some paperwork, and then it sends you the check or wiring instructions to fund your investment. Now, I have been answering some of your questions in the chat tonight, but I also wanted to, if we didn't get to your question, you can scan this QR code if you'd like and pick out a time to schedule a time to talk to us. You can also email me personally at ryan@spartan-investors.com. Happy to walk through any questions that you have. But we do have a couple of questions tonight that I wanted to get to. The first question is, what is the investment minimum? And our investment minimum is $50,000. Thank you for that. And do I have to be an accredited investor? So for our Spartan Storage Growth Fund, you do have to be an accredited investor. If you don't have an accredited investor letter, you can actually do it all in the investor dashboard that I just showed you. There's a link in there. You can click on it. It generates a letter for free and gets sent to us. Do you allow self-directed retirement accounts? Yes, you can use self-directed 401k or IRA. Quest is usually the retirement account company that we work with the most, but we do accept self-directed retirement accounts from any custodian, so happy to work with you on that. Okay, how many full cycle realized investments has Spartan had? Okay, we talked about that, 14. And how is Spartan handling the rising interest rate environment? Yeah, so we actually covered that a little bit in our financing discussions for each project, but each project has a fixed interest rate, meaning that if interest rates change, we're not going to be subject to any interest rate hikes. So I hope that kind of answers the question there. But will there be depreciation on the investment, meaning that investors would get the benefits of bonus depreciation? There will be, but here's the concern is that if you're counting on a specific amount of depreciation in the first year for the tax year 2023, it's going to be difficult to get that because we haven't entered a lot of the projects into service yet. So I would project that over the 5 years of the investment, at varying times, you're going to see 20 to 30% depreciation, which is still fantastic. But it's hard to predict when it's going to be depreciation because investments need to be entered into service in order for the depreciation to be realized. And so next year, when we deliver the Bellevue project and most likely the Pea Ridge project, then that additional depreciation will be realized. Kingsland will kick out some depreciation this year because it is entered into service, and then it'll also have additional depreciation in subsequent years because we'll be adding on to the property. All right, great questions. I'm going to go ahead and just wrap it up at this point, but I wanted to thank everybody for coming on and reviewing the Growth Fund. Someone asked about when the funds are due, and the investment's now about 85% full, so meaning that there's only about 15% left to raise. So if you wanted to invest, now is a great time to do it. We actually accept funds on a first come, first served basis based on when funds are received. So if you are thinking about investing, get in touch with us if you have any final questions, but we expect this to close out fairly soon. So it's really just dependent on first come, first serve. So thank you everybody for coming on and reviewing everything, and we hope you have a great evening. Talk to you soon.